We've mentioned currency trading a few times, so let's spend some time explaining Forex. Forex is just an abbreviation for the term foreign exchange, which is just a reference to currency trading. Most of you might only consider currency trading when you're traveling to another country that uses another currency. And at its core, that's all Forex is. It's just calculating the different exchange rates and making a bet that one currency that you're purchasing today is weaker from an exchange standpoint than it will be in the future. With Forex, either you make your money that way or you can use it as a hedge if you believe that the currency of your nation is not stable. Now, as the basis for the exchange is just the exchange rate, and to calculate an exchange rate, you take the new currency and you divide it by the base currency. To determine how much you'd have in the new currency, you can take the base currency and you can multiply by the exchange rate. Obviously, this is a pretty simple and straightforward calculation, which can be deceiving because in terms of trading currencies, it can get complicated, mostly due to the quantity of currencies that are out there, but it's important to keep perspective on what's leveraged throughout the globe. Now, this here is a screenshot from Wikipedia, where you can see that as of April of 2022, 88.5% of all of the currency exchanged globally involved US dollars. The euro was second, encompassing another 30% of trades. Then you can see that's followed by the Japanese yen, the British sterling, the Chinese yuan, and then the Australian and Canadian dollars. The thing to keep in mind here is that if you're going to move money into another currency, just make sure it's a currency that you can also trade with and get out of in case it doesn't work out like you think it will. Sticking with more popular currencies is safer, but if you're looking to use currencies as an investment vehicle, make sure to start paying attention to geopolitics and global trade balances. Currency trading in general is not necessarily a way to make a ton of money, and I know there are folks that would totally disagree with me, but if you're new to investing, you're better off staying away from it, unless of course, you need it for a nice holiday or something like that. Now, I do know some individuals that come from international families, and there's definitely been times when they've been able to make their knowledge of the exchange rate benefit them. So just like anything else with investments, if you pay close enough attention to it, it can benefit you. But in general, currency trading is something that new traders should stay away from and take time before jumping into. For this program, we just want to introduce you to the subject. We don't really want to get a whole lot into it because there's so much from a geopolitical standpoint that goes into currency values that could be a whole nother lesson. Beyond typical nation-based currencies, a new type of currency has emerged over the last decade. When cryptocurrency first came out, it was a concept that I thought was really cool. It's a decentralized peer-to-peer fiat currency, which just means that it's got a floating value and it's only worth as much as people value it. There's also no need to control the supply, eliminating the need for organizations like the Fed and the Treasury. Now, obviously, that creates conflicts with the powers currently maintaining the status quo, which is why some governments are completely against them. Now, the currency gives the people control, and it takes control out of the hands of the bureaucrats, which is why I'm all about it. So let me explain why. Something you might not know about the US dollar and all of the currencies that were on that previous page is that they're all fiat currencies, meaning that they're not backed by gold. They're essentially backed by the hopes and dreams of their economy, and the values float based on the goods that are traded in those currencies. Cryptocurrency basically works the same way, except for that there's only so much created to begin with, so it's really demand and the types of goods being traded that props up its value. While processors do have the opportunity to generate small amounts by processing transactions on behalf of the networks, for the most part, you can't just create more. So that helps to offset future inflation potential by removing people from the equation so they can't fight over who controls it or how much should be out there. You probably saw this chart over here for the price of Bitcoin. And when I look at that chart, I feel like that's just representative of people losing faith in the market and the offerings that are out there. A lot of people have started looking for other ways to hedge against the market and to protect their savings. Others are looking for that get-rich-quick scheme and trying to find new ways to protect themselves against inflation. Personally, I think cryptocurrency is the future. It's just a matter of which ones ultimately end up holding value. A decentralized peer-to-peer currency to me is a really good idea, but it's still in its infant stages. And on a global basis, there are a lot of threats out there. So we'll see how it progresses, but this is certainly an area where you should pay attention. And if you want to find out more, there are a lot of good communities out there that you can learn from. My guess is that at some point in the future, this will probably be a topic that we have to expand on and provide more content.